Hello, fellow traders. 'Tis I, the Rumpled One. It's November 7th, the day before the election here in the US of A. But we're not here to talk about politics. That's on my other videos. We're here to talk about trading. And we're going to look at the TheRumpledOne's dashboard, which is advanced alien civilization technology or something. Anyway, there's some interesting occurrences here. Over the weekend, we've had some nice gaps here. You can see there's a gap from the weekly close to the weekly open. And here you can see the dashboard is telling you there was a gap up and it hasn't filled, because if it's filled, it would say fill. Pretty simple. But this is something that you might want to look at. Keep in mind to short the Australian dollar yen sometime this week, looking to see if it's going to fill that gap. Really not that exciting, but there is a nice possibility there. And you can see the euro yen gapped up, the euro dollar gapped down, the pound yen gapped up. In fact, I think that was a huge gap. Well, maybe not that huge, but it did run up 100 pips from here to here. Because you can see we were right around 129, and then right here we were over 130. So there was a big run. New Zealand dollar filled its gap. Pound dollar gap down. Right there. I hope you guys got some of that short. And right now we've got the dollar Canadian in a possible trade. You can see it's filled the gap. It's moving up. It's in the upper ATR zone. It's in the rat zone. It's above the H1 highest open. It has done the minimum. It's gone past the minimum ATR, and it's near a pivot point. So you can look to short somewhere in this area right here. And let's see, I've got about 12 minutes left. One of the ways I like to short, like say a naked trading chart, is you can just look at this horizontal line here, and you can see here where it's going above previous highs. Well, what goes up must come down. So when it goes up and starts to come down on a red candle, you can look to start going short in those at these different levels. We can even scrunch the chart down a little bit more. So if it got up and say in this area somewhere around here, and it started coming down on a red candle, this is right where I would go short, right around 34.16. Now if it doesn't go, so on the next candle, if that candle goes, let me make this nice and wide. If this next candle goes above, then it's going to be green, and it's going to start coming back down. Might take that trade. But if it came down here, strong red candle, it would actually be below the midpoint. You can kind of eyeball that. Might want to go short here, or maybe go short at the midpoint. Just trade possibilities, things to think about. And one of the things about trading is before you enter a trade, before you even sit down to trade, you should basically have your plan mapped out, your tactics, your strategy, your method. It should all be mapped out, preferably written, maybe even written on the chart. If you use my TRO My Notes indicator, you can actually I think it allows you to put 10 or 12 notes right on the chart. So you can put your trading plan there, your things to remind you. So it's right there in front of your face, no excuses. You know, some people use post-it notes, but it's like, hey, let the computer do the work. That way it's there. You don't have to worry about it. So that's just one thing to be thinking about. So if you're saying, hey, I'm going to be going short every time price cuts back down below one of these high points, that's your trade. And you might want to say, I'm only going to do that if the candle is red. I'm not going to short on a green candle. Or you might say after 3 green candles in a row, you're going to start looking for reversals, the old buzzard reversal from back in the day. I'm sure maybe a few of you remember the buzzard reversal based on statistics. How many green candles in a row do you expect to have? You might have a rule that says you'll only trade if a reversal, if it's in the ATR zone, or if it's gone past a certain range. And sometimes you can measure the range differently. You can measure it from the low and high of the day, high minus low, there's your range. Other times you might want to say, well, I'm going to only measure it from the open, just to give me an idea, you know, how far the buyers pushed it up or how far the sellers pushed it down for the day. In fact, I'll probably come out with a new column or two that shows those ideas. You know, personally, I pretty much only trade if it's in the rat zone, meaning 20 pips or less from the high, or 20 pips or less from the low. Don't like to enter trades in the midpoint very infrequently. The weekly open trade would maybe be open trade crossover would probably be the exception if I see price moving strong at that point. But you should have all these ideas down on paper or somewhere so you know what to do, when to do it. Because trading, we all know it's about timing. You can enter the trade at the wrong time. You might have picked a direction, but you just entered early, or you entered late. So you have to get the timing right. If you get the timing right, you can get a few other things wrong and still make money. But timing is critical. And as I've always said, you know, all you need to trade is a horizontal line, just to have a couple. So we can switch over here and we can look at the high of the previous day, current day, low of the previous day, low of the current day. Simple, simple. This is off the TROHL5 indicator. Just simple levels. Maybe we'll switch to the M15 chart. So here, once again, you can see gaps filled. We got a green candle, so we're just going to wait. We got 5 minutes to wait on that, and I've got about 6 minutes left in the video because I only make 15-minute videos or less. So that's what we have going on here. We can always switch and look at some other pairs to see what's going on. And one of the things you can do with the HL5 indicator, as I mentioned before, you might want to trade off of the high and low when it's crossing. So you can come in here and you could say, okay, I'm just, whatever the chart period is, and since we could say, if we're doing the hour chart, we could say the last 24. So we could switch this over to the hour. We don't need a shift. And so what we would do is, we now have what looks like a mess on the chart. Okay, these are all the highs and lows for the last 24 hours. and that's quite the mess. I believe I've probably showed you this before, but one of the things I have in the indicator is only show the lines that have not been crisscrossed. And that clears up the chart a whole lot. So you can see here, you can now look at breakouts. So you could have a breakout from 1 hour ago, breakout to the upside from 2 hours ago, breakout to the downside from 17 hours ago. That's one way of using it. And of course, the other way would be, let's just do one bar, and we're going to shift it to the previous bar. And so now we're going to look at the breakout of the previous bar. So if we shift the H1, you can see right here, previous H1 level. See, these lines didn't change even though we changed time frame, chart period. That's the power of horizontal lines. So that's one way of another way of using the HL5 indicator to do those breakouts. Let's see if we have a breakout somewhere here. Actually, if we really wanted to look for breakouts, what we can do is come over to the dashboard, and there's 3 different breakouts. Actually, there's more than 3, but the breakout column, we can turn this on. Say put it in 14. We only want to do a 1 hour breakout. Okay, so we could do breakout by time or just a column breakout. Then of course we got the wick zone, buy zone, which are also breakouts. So you can see here it tells us where the breakouts are about to occur or are occurring. So you can see here that's already happened. Dollar franc, we've got the breakout already. Actually, we're looking at the 15-minute chart here. Let's go back, change that to 1 hour. A little bit. You can see here it's doing the breakout. Here it's within 2 pips of that high. That's why it's purple. It just broke out. We just got it here on the euro pound. Within 2 pips. So magenta means you're within the threshold amount. Orange means you already have, the event has already happened. So, and of course you can change the colors on your own. And for those of you who haven't watched the other videos, the steam, it's like, what the heck is steam? It's called SR, steamroller. Some people call it getting freight trained. When you go against a really big candle. So for example here on, let's see, where are we? You can see here we've got we're in the process, got a steamroller. You don't want to go against that candle. It wouldn't be smart, wouldn't be prudent, because it could get rolled over. Same thing here with the pound. You could get steamrolled. And how's that? If this range is bigger than the ATR, it's considered a steamroller. And you can see here we've got the Canadian dollar is in the upper ATR zone. Tells you here, tells you here. You might want to think about taking a short, but I wouldn't do that against the steamroller. So you'd want to wait till the end of the hour, which I'm at the end of my 15 minutes. I've only got about 30 seconds to tell you guys, it's not what you trade, it's how you trade it. TheRumpledOne signing off.